One of President Trump's favorite hashtags is fake news. It's part of his crusade against what he thinks is a biased media. Last week, that battle took an unusual turn right down Wall Street. President Trump said on Twitter people who lost money when the stock market went down 350 points based on the false and dishonest reporting of Brian Ross of ABC News, he has been suspended, should consider hiring a lawyer and suing ABC for the damages this bad reporting has caused, many millions of dollars. We're joined by Jay Richards, assistant professor in the School of Business and Economics at the Catholic University of America. He's also a host of The Force for Good right here on EWTN. Welcome back.
Great to be with you, Lauren.
Let's talk about this incident. You have said that few people probably lost money from that little blip in the stock market. Why would someone sue even if they have lost some money?
Well, I mean, the reality is that anything surprising that happens is going to create a dip in the market. Markets like stability. And so Brian Ross's story on Friday morning, turns out it was wrong. He said that Mr. Flynn had met before President Trump was even elected with Russian diplomats. Turns out it was totally false. It was after he was elected as a president-elect, you know, he has representatives that met with Russia. It's now perfectly normal. The result, though, during the day on Friday is a big dip on the market. But if you look at what happened on Monday, we got another all-time high. And so unless somebody was foolish enough to actually sell a bunch of stocks, say, Friday afternoon, it's very unlikely anybody lost money.
Global markets on election night took a hit when President Trump was announced as president. It steadied, it closed sharply higher. President Trump has been in office for just a year, and it appears that Wall Street loves him.
Absolutely. I mean, the reality is when he was elected, he was a complete unknown. It wasn't predicted that it would happen. So again, it's a total surprise. But between the stuff he's done on regulation, the things especially that he's done and not done, he had threatened to blow up trade deals, for instance. He hasn't done that. So if you look, not at his tweets so much, at his actual policies, I think it's been very business friendly and very good for the economy.
So President Trump, you're saying, is good for the economy?
I think that's absolutely true, and I think the market reflects that. I mean, this is four all-time highs of 1,000, first time ever in 2017 during his first year. So I think the markets seem to love what he's doing.
You talk about Catholic social teaching and the way that it can be applied to business.
Yes.
How could Catholic social teaching be applied to stock markets? Is there any connection there? It seems to me like, no, I don't think so.
No, absolutely. First, in the companies that you invest in. If you yourself are an investor, an institutional investor, there are things just simply as Christians that we don't want to be involved in. But also, we should want, all things being equal, the market to do well. It's not just about Wall Street. If the market's doing well, that's also good for ordinary people on Main Street.
Thank you so much, Jay Richards, for coming by the program, host of A Force for Good right here on EWTN.
Thanks.
Thank you.